MACD timing exposed. Welcome. Believe it or not, the traditional use of the MACD indicator where traders use crossovers for timing is frankly wrong. I will show you a better way that does not rely on MACD crossovers. If you've ever attempted to trade using the MACD indicator solely relying on crossovers, you know that it leads to frustrating results, to say the least. By the way, stay to the end of this video for a bonus timing trick that each trader needs to master. Today we are going to be using the Dow Daily for this illustration. First, let's begin with this down move here, and we can see that the MACD did set the stage, because if you understand that there was a move here down right there, that the MACD was trying to go down but failed, take that little bit of a support zone there and notice what happens when the MACD comes back and breaks that area, which is this movement somewhere there on its way to this down move here. Next setup, where the MACD sets up again, tries to move higher here but is rejected, but when it comes back and takes out that little bit of a resistance area right here, notice that corresponds with this price movement and you get a successful swing trade, this time to the upside. Now we can pick up the pace because we can see resistance here, prices were there, we come back and break the support zone here, which is this price movement, and of course we get a desirable swing trade from there. All right, notice again double rejection in this area here, we get a nice line, we move above this area for this re-entry and we get a good swing trade again to the upside. So we can rinse and repeat. As a timing tool here, there's some rejection here, notice prices are rejected here, the MACD comes back and clears that area, and again we get a good favorable swing trade, entry there, and we have a very good swing trade. The market offers another opportunity. It took some couple of weeks here, double rejection area, draw a line from there. When you break it, the message is you need to go short. It's this break right here. You get this initial swing trade down. Now notice what happens again. We have a rejection point there, a little bit of a support attempt there that fails, draw a line from there, extend it out. Notice what happens when we break that area. You see the market really take another step down before this move down here. Now notice rejection here on the MACD, draw a line. What happened recently when the Dow moved above this range? If you are watching it, it was very self-evident. This is an entry, and of course, since then, the market has gone on a very good recovery swing trade to the upside. And now here is the bonus timing trick, as I promised. What this does consider is the zero line. So what you want is use the same method, but your biggest signal, the biggest swing trades are the ones that come when the MACD moves above a recent resistance area around the zero line. Again, around the zero line, when these signals are close to the zero line, like here, you get a more meaningful swing trade in the direction of the break. And even this recent move here was very close to the zero line. The closer to the zero line, the more powerful and more extended a move is going to be. The farther away from the zero line, for example here, the less energy a swing trade is going to have. So you want this to be as close to the zero line as possible. Links for more free videos are gonna be in the description.